Welcome to the first breakdown of Flare FX. Today I'll be breaking down Euro USD. I've been wanting to break down this for a long time. I've just been procrastinating more than anything else. Please like, comment, share, subscribe. Comment anything you wanna know more. This video is gonna go beautiful, man. I'm excited to even start. You know what I mean? So just make sure you just subscribe, share, comment, and then let's just get started. Now that we got all the admin stuff out of the way, we can hop onto the charts. Personally, I like to start trading from the daily time frame. More so a situation that, like, once you gain like a higher time frame perspective, you kind of understand where the market is trying to go, and you trade with the higher time frames. Because I do go to like time frames lower, like the 15 minutes, so I kind of have to make sure that everything is on point, especially from the higher time frames. You get what I mean? So the way I usually do it, obviously start marking out the highs. These are the swing highs that I'm marking out, right? So we know where the market is going or where the market is trying to go, right? Okay, cool. We've marked out the swing highs. This is the last low that has occurred, right? So let me just kind of zoom in a bit so you can clearly see. Okay, cool, clean. Now we understand that this is where the market has came to, right? Then you could put some labels in here so we understand that we are in an uptrend. We know we are in an uptrend, but just making the charts a little bit cleaner so you can understand as much as it is. But yeah, you should have templates as well as it is. This is what I teach in my course too. But for now, let's just focus on the higher time frame, right? Okay, cool. We already marked out the structure. So this is a lower low, a higher high, a lower low, a higher high, a lower low, and then price continued to go high. So, and broke this high too. So we already know this area over here is of high confidence because it broke this structure and broke this structure as well. You get what I mean? Okay, fine. So since we understand on the daily time frame we are moving a bit higher, we can also start marking out the 4-hour structure as well. So just doing this kind of helps you understand, because as much as it is, you're trading in no man's land if you don't understand where the price is or where the price is trying to go, right? So this is all the lows that I've highlighted and the highs that I've highlighted. Then you come in with your two. So okay, obviously, if we start from the higher time frame, we came up, it broke this high, right? Let's even put it nicely so we can all understand, right? So this is the high, the break of structure, price moved up, came back down, right? Okay, cool. When it came back down, obviously there's a change of character because price is coming back in like a pullback. Basically, it's basically a pullback to either go higher or just break the low, right? So right now this low has been respected. Price hasn't came here anytime soon, right? And the nice thing about the price, the way it looks, or price action more so anything than else, is that the way it's coming to the zone, it's very corrective. It's not impulsive. This is impulsive. You see, if it came really bearish, it's just choppy as much as you can see. So you can tell that like sellers are losing a lot of strength. So we can just see how we can capitalize from that, right? But nonetheless, let's just focus on the main thing. So now we start identifying the structures, like structure mapping. We're making sure that we're putting all the lows that need to be put here. We could classify this as a break of structure. The break of structure already happened over here on the higher time frame, but obviously now, since we're trying to focus on the main structure, we highlight this as a change of character, and then now we can start labeling it as break of structures, right? This is a break of structure, clean, simple, cut, clean, right? So now, obviously, a lot of people are going to be like, oh, Mr. Flair, why don't you label this as a break of structure, right? Now, here's another thing about trading, right? This is where liquidity lies, right? As much as it is, because it's relatively equal highs, and as much as you can see, price didn't necessarily break out and close. If price broke out and closed, like, let me get an example. If price broke out and closed like this, like it closed above this high, then you would classify it as a break of structure. But for now, as much as it is, I would classify this as a purge of liquidity. So you go and also mark it, okay, this is a purge of liquidity, right? The X means, yes, so the X means the liquidity has been taken, right? So now, since we understand that the liquidity has been taken over here and the price continuously moved low, so the liquidity was taken, and then there was also a break of structure that happened over here, right? Break of structure. We could probably mark out this as a low, but this one looks more cleaner because of the way the market structure is, right? Okay, cool. So now the main situation, before I even go into the entries and everything else, is understanding market structure, guys. Understanding market structure is the most important thing, because like one thing that got me to my consistency is understanding where the market is, where are we trading to, and how can I execute based on how the market is moving, right? And market structure never lies. Like, market structure never lies. So just comment down below if you want more like market structure breakdown videos, like where I just go deeply on market structure just alone, you know what I mean? But yeah, so okay, cool. Since price has made this low and made this high, so obviously we all know that we're trading between this range. This range is where we could consider seeing price what is this, come back in and trade off of. So this range, we're waiting to see how price is going to react between these two lows and highs, right? So now the best thing you could also possibly do is use a fib retracement tool, right? A fib retracement tool is basically a tool that like shows you like percentages in terms of like they're used for retracements. Let me just show you how it looks like. So for me, this is the fib tool I have, right? So it has the 61% and the 50%, right? So this zone, the 50% and 61% zone is a zone where price usually reacts off of, right? But now using a fib, the appropriate way to get the best like effectiveness for you to get high probability entries is what's important, right? And this is one thing I teach in my course, like how to mark the fib properly, because yeah, I went through a lot of courses teaching me a lot of stuff, but they didn't help, right? Okay, cool. So since now we all know that we where the market is going, and this is only on the 4-hour time frame. We haven't even touched the 1 hour. Now we know the bias. Like, we know right now that we've printed this low and we're looking to trade back in between these two ranges, right? In between here, right? So obviously now you're gonna use your eyes before you use the fib in anything. What high probability situation are you seeing here? Like, what are the order blocks you can enter off of? The fair value gaps are you entering off? Fair value gaps are basically like these small gaps in between price. This is where like banks leave their, like, it shows a sense of imbalance where there's some market order positions that haven't been closed, and banks want to come back and mitigate those zones. You get what I mean? So those are high interest zones. So even if I can mark it, I'm sure this is a fair value gap as well. Perfection, even to the T, as you can clearly see. Price literally came and tapped into the fair value gap right over here. So that's perfection. As much as it is, fair value gaps do work if you use them right, and it's something that I teach. Comment down below if you want me to go deeper on fair value gaps. You get what I mean? Okay, fine. So since we understand that this is where we're trying to go, so for me personally, automatically I'm already seeing, okay, cool. Price came down, it formed this high, it went down lower, right? And it broke, right? It broke the structure and it broke the structure and made this low, right? So automatically I'm seeing, okay, cool, this is a high probability place I would like to execute my buy or my sell limit, so I can sell down to the lower. Because if you think about it, these lows haven't been touched. This is a form of liquidity here. Let me just fix up the chart right quick so you can all see properly. This is a form of liquidity here. These are relatively equal lows. If I could take this and do it like this, no, this is a thing. I'll just have to label it like this. This is relatively equal low, so we could count this as, what is this, as liquidity, right? So now we're waiting for price to come back where? To come back up to these highs, right? So now we go on to the lower time frame, right? Clean cut finish, lower time frame. This is the low it has printed, right? So now obviously also on the 1 hour time frame, these market structures, as much as it is, you can mark it out, but I don't really like marking out market structure in the lower time frames unless maybe I'd want to like scalp and stuff like that. You get what I mean? So we could label this as a breakout structure as well. So now for me, everything that I see right now is that, okay, cool, this is the 4-hour POI, right? We could even mark it out. This is the 4-hour POI. 4-hour POI, 4-hour POI. There you go. We'll leave it in the center. So this is the 4-hour POI where we're looking to execute, right? Where we are looking to execute. So now we know that, okay, cool, we could even market structure. This is the high, this is the low, this is the high, this came down here, it formed this, it formed that, then that's fine, right? So this is where you use the Fibonacci as a form of a confluence, right? So you take it, right? This is how you use the Fibonacci, right? Price is going to be coming into the zone, right? Into the fair value, into the POR, right? Or the order block that we spotted on the 4-hour. It's going to be coming into it, right? So you take the Fibonacci and you place it on this low all the way to the high here. And automatically the Fibonacci shows you the area where price can come back, right? Now obviously you use this thing to refine it a little bit better, a little bit cleaner, because this thing usually works when price comes back and mitigates like the 50 or 61% zone. It usually works, right? Now with the Fibonacci tool that I use, these different take profits you can have over here. Obviously this could be a swing trade. If you are interested, you could even take profits before it breaks liquidity, but like we know that the liquidity there is an enticement. Like it's going to entice more and more people to enter the market because there is a way like the price could break, right? Okay, that's fine. Now we understand that price is coming all the way up here, right? Now we need more confluences. You can't just be like, okay, cool, there's an order block. Okay, cool. The Fibonacci retracement tool is on the 50 and 61% zone. Okay, cool. You need more and more confluences, right? So cool. Now we have some form of trend line liquidity over here, as you can see. We could mark this out. I can just move this just to make the charts a bit cleaner. Just a bit cleaner. There you go. This is a form of the liquidity, right? So now obviously I could mark it out like this, and then you can take that's liquidity as well, that's liquidity as well, that's liquidity as well. So already the market will break these highs, consistently break all of this thing just to come to the POR, right? But for now we'll just leave the one on top because this is the one we all understand, right? So now we can even move to the 15-minute time frame, because now we understand the higher time frame market structure, right? So get this, right? You can counter trend trade this pair, right, as well. And EURUSD likes to follow like order blocks, especially on the lower time frames, right? So we understand this is the higher POI. This is where we're looking to be selling. But for now, we can buy all the way to the POI, right? Okay, cool, fine. Now same situation that you did in the 4-hour time frame, daily time frame, you market structure in the 15-minute time frame, right? There you go, there you go, there you go. The break of structure, it came back up, it broke again. So now we already know this was a break of structure, right? I'm gonna just highlight it with the pencil right here. This was a break of structure, right? Damn, no, this was a break of structure. Price came back up. We could even call it a purge of liquidity, so I can put an X here, a purge of liquidity. Price came back up here. This is called a change of character. Price came back into it, mitigated via this order block over here, continue to push up, right? So now you as a trader should be asking yourself, okay, cool, what can I do to capitalize on this position, right? So now we can even mark out the structure that, okay, cool, this is a change of character. We could even call it an internal change of character because it happened on the lower time frame. This is where you need to understand, like 15 minutes, as much as it is for entry, you need to understand it doesn't hold as much value as the higher time frames. You know what I mean? So this is the internal change of character. Then you could call this a purge of liquidity as well. So the X, remember the X that I was drawing with the pencil? Okay, cool. So now we even mentioned that the mitigation of this order block right here. This is why price moved up the way it moved up, because of the mitigation, right? Okay, cool. So price did mitigate the zone. It did kind of change the internal change of structure, but we're looking over on the swing highs. This is what helps you. When you mark out the highs, you already know which things are you supposed to be looking at. Because automatically, I could have marked that this is an internal change of structure. Like, there's so much confusion. But once you mark out the highs, then you already know that, okay, cool, like this is what I'm focusing on, right? Okay, cool. So price has mitigated what? Price has mitigated already this order block, right? And it continued to move higher. So it moved very impulsively. So this is a good sign, right? Now, another thing that you can see, the way it moved up, these 3 consecutive bullish candles, already you can see the buyers entered in this position, right? So now here's a hack, right? Obviously, okay, maybe not so obvious for the people who don't know, but this is an order block. I would already highlight that, okay, cool, I'd be interested in executing based off of this position, right? Now we use the fib again, right? We come here, right? This is the break that already happened before. We could even classify this as an internal break of structure, right? Because price came back just to mitigate this thing. It didn't break this low, so we can't say we're in a downtrend, because if it were in the downtrend, we would have break this thing and then we would have been looking to sell, right? But for now, we're looking for buys, right? Okay, cool. This is the order block that we're looking into trading off of, right? Now we can use a tool. Now we understand, right, that okay, price is going to be coming into the zone, into it. Let me just do this, into the zone, right? Once price is coming into the zone, you take the Fibonacci. Obviously, use this thing to be as precise as possible. You take the Fibonacci, you put it over here. You take this, you put it over here, and then you drag it all the way here. So automatically the Fibonacci shows you that as much as this is the whole order block you can execute off, price is likely or most likely to come into the 61% or the 50% zone, because it's between that range that it broke out of, right? We can go into the 5 minute. The 5 minute probably has an order block that is as clean, like I said, right? Clean cut finish, right? It's not a problem. You don't mind it. It depends on the trader, because I'm not saying trade like me because I automatically say use this thing, right? But for me, I've backtested the strategy many times to understand that like I can trust this zone, right? Now, the beautiful thing about this Fibonacci, it already automatically highlights the take profit zones, right? So you come in, obviously you put your limit here, and then all the way, this is take profit 1, this is take profit 2, right? I have a signals group as well where I do share signals on these things like daily, like the setups that I see. I could share these setups, the take profit 1, take profit 2. I'm just doing this to show people that like trading is really simple, and the only way we can grow as a community is if we consistently just learn from each other, right? Okay, cool. No, my bad. Okay, cool. So we can remove this Fibonacci. We can even come lower here. We can even highlight this high. This high, we could call it a liquidity as well. You get what I mean? So you could even target this just to be safe. It's a clean. There you go. You could just put it beneath the close. Okay, cool. So check, right? Another high confluence thing, right, that you can already see that this market is already doing. It's already coming down correctively. For the people that trade patterns, you can already see a patterns forming here, another patterns forming here. This is called a bullish flag or falling wedge, some type ish like that. So price could come back, tap in here, tap in here. This is also a form of liquidity, trend line liquidity, something I also teach in my course too. So yeah, once price comes in, taps into this point here, then we're looking to buy. This is a clean 10 is to 1, 1 is to 10 risk to reward ratio. What more can you ask for? If a trade is clean as this, like trade as clean as this, and the thing is, you must remember, it doesn't mean that, oh, okay, cool, this is the only thing you can target, right? Don't remember, we have a 4-hour POI where you can swing this thing. So this is where you see people executing sniper entries and holding them for a long time. So this is my advice, right? You could probably open 2 accounts or use 1 account. Open 2, maybe 201 lots. Just to start off, 100 Rand, 201 lots. You go 0.1, 0.1, right? Or 3 0.1s. Then you have 3 different take profit zones. Then you know, okay, cool, take profit 1 is here, take profit 2 is here. Once price starts moving, right? Let me demonstrate even trade management, something I also teach in my course, right? So for example, let's use this pencil. So price comes in, it trickles in, it taps us in, right? And it flies, it breaks the structure, it comes, it flies, it breaks this thing, it comes back to this point, right? Automatically, as price is moving up, you're highlighting these areas. Okay, this is a swing high, this is a swing high, this is a swing high, this is a swing high. When price consistently does that, you move your stop loss. So for stop loss from, my bad. So you move your stop loss. This is your stop loss. We could categorize this. Why doesn't this thing want to work? Okay, yeah. Stop loss. Right, so you move. This is your stop loss initially. As price moves up to the top, you take the stop loss a bit higher. Price moves up, you take the stop loss a bit higher. This is called trade stop lossing. You get what I mean? So as price is consistently moving into your favor, you're locking in profits, locking in profits, locking in profits. You get what I mean? So yes, this is a market breakdown for Euro USD. I think for more than anything, I would like to break down more pairs. I just need to find out from you guys, is this the content you want more from? You know what I mean? So just like, comment, share as much as anything. Subscribe more than anything, because I need to see a bit of growth for me to be consistently pushing this thing, you know. But overall, please comment anything, DM me on my Instagram, DM me on my TikTok. I'm always available for any questions regarding any trading related questions, and then yeah, I could help you most definitely. But anyway, thank you for watching this video. Mr. Flair signing out.